The American dream of owning a home is alive and well. It's a dream shared by millions, a vision of a place to call your own, a haven for family and loved ones. But for many, navigating the complex world of mortgages and loans can feel like trying to decipher a foreign language. Don't worry, you're not alone. We're here to break down one such financing option, the chattel loan, and empower you to make informed decisions on your journey to homeownership. We understand that buying a home is a significant financial decision, often the biggest one you'll ever make. It can be daunting, especially if you're unfamiliar with the ins and outs of financing, but remember, knowledge is power. By understanding your options, you're taking control of your financial future and paving the way to that beautiful home you've always envisioned. So, let's dive in and demystify the world of chattel loans, shall we? Now let's talk about chattel loans. What are they, and how do they work? In simple terms, a chattel loan is a loan specifically designed for purchasing manufactured homes, also known as mobile homes. Think of it like financing your car. When you take out an auto loan, the car itself serves as collateral. Similarly, with a chattel loan, the manufactured home you're buying becomes the security for the loan. Here's the key difference between a chattel loan and a traditional mortgage. With a chattel loan, you're financing the home itself, not the land it sits on. This is particularly relevant if you're buying a manufactured home situated on leased land or land that you don't own. In such cases, a chattel loan provides a practical and accessible financing solution. It's like getting a loan for the car, not the driveway it's parked on. When it comes to chattel loans, the age of the manufactured home plays a crucial role. Why? Because homes built before June 15, 1976, are subject to different building codes and regulations. These older homes might not meet the criteria for a traditional mortgage, making a chattel loan your primary financing option. However, if you're eyeing a newer manufactured home built after June 15, 1976, you might have more financing options available. These homes typically adhere to the HUD code, making them eligible for traditional mortgages, especially if they're permanently affixed to a foundation. Remember, the year 1976 is a significant turning point in the world of manufactured homes and their financing. Section 4. Who uses chattel loans? You might be surprised. Contrary to what some might think, chattel loans are not just for a niche market. They cater to a wide range of individuals and families seeking affordable home ownership. Who are these individuals? Let's take a look. First-time homebuyers. Chattel loans often come with lower down payment requirements compared to traditional mortgages, making home ownership more accessible for those just starting their journey. Retirees. Seeking a simpler lifestyle? Many retirees downsize to manufactured home communities, finding chattel loans a convenient financing solution. Budget-conscious buyers. Chattel loans can be a more affordable option compared to traditional mortgages, especially for those looking to minimize their monthly housing expenses. Land leaseholders. Living on leased land? A chattel loan allows you to finance the home without owning the land, providing flexibility and affordability. Section 5. Chattel loan, nuts and bolts, terms, rates, and structure. Now that you understand who uses chattel loans, let's unravel the details of these loans. The terms, interest rates, and overall structure. Knowledge is power, and understanding these aspects will empower you to make informed decisions. Loan terms. Chattel loans typically come with shorter repayment terms compared to traditional mortgages. You might find terms ranging from 10 to 20 years depending on the lender and loan amount. Interest rates. Interest rates on chattel loans can be higher than those on traditional mortgages. This is because lenders often perceive chattel loans as riskier since the loan is secured by the home itself, not the land. Loan structure. Most chattel loans have a fixed rate structure, meaning your monthly payments remain consistent throughout the loan term. This predictability can make budgeting easier. Section 6. Weighing the scales. Pros and cons of chattel loans. Like any financial product, chattel loans have their own set of advantages and disadvantages. Weighing these pros and cons carefully will help you determine if a chattel loan aligns with your financial goals and circumstances. Pros: lower down payment. Chattel loans often require lower down payments compared to traditional mortgages, making homeownership more attainable. Faster approval process. The streamlined nature of chattel loans often leads to quicker approval times, allowing you to move into your new home sooner. Flexibility. Chattel loans offer flexibility, especially if you're considering moving your manufactured home in the future. Cons: higher interest rates. Be prepared for potentially higher interest rates compared to traditional mortgages, which can increase your overall borrowing costs. Shorter loan terms, shorter repayment terms mean higher monthly payments, so ensure you can comfortably manage these payments within your budget. Depreciation. Manufactured homes can depreciate in value over time, similar to cars, which might impact your equity growth. Section 7. Should you consider a chattel loan? Finding the right path for you. So, you've learned about chattel loans, their mechanics, and their pros and cons. The big question remains, are they the right fit for you? The answer, as with most financial decisions, depends on your individual circumstances, financial goals, and long-term vision. If you're considering purchasing a manufactured home, especially on leased land or without a permanent foundation, a chattel loan might be a viable option. They can provide a pathway to homeownership, offering affordability and flexibility. However, carefully analyze your budget, long-term financial goals, and the potential risks before making a decision. Remember, knowledge is power. Don't hesitate to seek guidance from a reputable financial advisor who can assess your specific situation, provide personalized advice, and help you navigate the complexities of home financing. Owning a home is a significant milestone, and making informed decisions ensures a smoother and more fulfilling journey. You've got this.